The S&P market is in a general uptrend. However, at this time, it is still likely it's completing a corrective wave that's likely to end next week at the end of October. Today is October 21st, and we are expecting the basic same story that we said last week. As a matter of fact, the market did almost exactly what we thought it would. As strange as it is, it's been repeating what happened 18.6 years ago, almost day by day. You can see we expected a low on the 16th of October, and it came in, and then it rallied since then. That pattern goes up for another day or so, 22nd, 23rd, could be a high point. And then it has one more dip that comes down into the 27th through 29th of October, based upon that very long-term pattern. What's interesting is the 2-month cycle also is quite a bit in agreement with that same 18-year cycle. That's a good sign when a short-term cycle agrees with the longer term. And then they both go up together. However, there is one more dip that comes in around the 12th or 13th of November, okay? And then finally, we go up into early January of next year. All right. Also, I want to remind you, if you look at the Traders World magazine, there's a description of our Market Forecast Mastery course in there that was written by the editor of that magazine, and you might find more information about the course than you've seen. So we're looking for an uptrend into January, but this is a time of the year where weakness is often available. Astrologically, the sun is in the sign of Libra in the sidereal zodiac. That's its weakest sign. Turns out the weakest point of the whole cycle of the sun is when it gets to 10 degrees Libra. It comes out October 28th every year. And October 28th seems to be very, very close to the low that we're expecting based upon the 2-month cycle and the 18.6-year cycle. And this year, the Venus position is also habitually very, very bearish until 24 degrees of Virgo. And that comes out on the 28th of October also. So astrologically, there's a lot of stuff saying that the 28th, 27th, 29th of October could be a low point for a resumption of an uptrend. Now, interestingly, also, statistically, if you consider the term, sell in May and walk away, people say, well, when do you walk away until? This is when. Generally speaking, the lows come in late October, early November. And if you buy now and hold it until April or May, you win 75% of the time, year after year after year, over 90 years. But if you look back the last 20 years, it's more like 85%. And if you get out in the early part of December, it's close to 90%. So if you expect November to be, you expect to see November to be an up month, ending at least early December. All right, it doesn't happen every year, but this year it's kind of stronger probability because Venus and the Sun both have their lows within a day of each other, and therefore they're both up at the same time, which doesn't happen. Also, the position of Mars moving into Scorpio on the 28th of October has a direct aspect from Jupiter on that day. So there's a lot of stuff indicating the 28th is kind of a really significant day, and more than likely than not, it is a low point. This is about a 70% chance. Now, on the other side of the story, there's still a 30% chance that some of the other cycles are turning down. For example, we mentioned 4 times the cycle of 49 weeks. That has a high at the end of October. And also 6 times that cycle has a high at the end of October. And then they both dip into third week of November, okay? So there's another possibility, if indeed the market doesn't do exactly what we want, that low that we're looking for around the 12th or 13th of November could be deeper than expected, and then it would go up after that more dramatically, okay? So you keep that in mind. Don't want to get aggressively bullish. Also, until we break above the highs significantly, not just by 3 ticks, the market is still up against a strong resistance level at that 6,800 area on the futures. And until it does so, you don't want to be aggressively long either. On the downside, we don't expect a dramatic decline at this point. We mentioned last time that the 18.6-year cycle had a 6.6% pullback. Our market has been stronger. We said we compare that one to our present market. Our market is going up stronger than that one. It went down less on the 16th than that one. And if it does have a minor dip on the 27th, 28th, 29th of the month, it may not take out the lows that we're at so far. at 65.40 was the lowest tick on the futures on the December contract. And that's a good possibility. So it could be that the super bullish position that we've had is still in play, but at this point you want to be a little more careful. This time of the year is seasonally weak. However, after the October bottoms, it's almost exclusively long. The interesting thing is we're very close to the high and we're near a low. If we're near a low and we're literally 0.25% from the high today, that's a good sign that the market could be very bullish going forward, and it supports our original theory. And we do believe it's probably going to happen. But you have to be careful. You always have to have a stop in your positions. Oftentimes it's useful to hedge if you know how. And if you don't know how, it's a good idea to learn. Because most professionals, they don't go into the market naked. They usually have some sort of insurance.